Good morning and welcome to Stock Market Today for Thursday, August 1st, 2019. I am your host, Dan Russo, Chief Market Strategist at Chaikin Analytics. Find me on Twitter at DanRusso_CMT. Stock Market Today brought to you today and every day by Chaikin Analytics. Head over to ChaikinAnalytics.com/today. Sign up for a free email. Follow along with this show. Get daily stock ideas for you to consider every trading day in your inbox before the market opens. So, a little bit of a down day yesterday. U.S. equities were weaker on concerns that yesterday's rate cut does not mark the start of an easing cycle. All sectors finished lower on the day, led by consumer staples and materials. REITs and financials did outperform, though they were lower as well. Treasuries were mixed, with the curve flattening. The dollar was stronger against the euro and the yen. Gold finished down 30 basis points, and WTI crude settled up 90 basis points. So your outperforming sectors: REITs, financials, utilities; underperformers: staples, materials, and tech. As we get to the desk this morning, a bit of a rebound. S&P futures are up 20 basis points. Asian markets were mostly lower overnight as China lagged. European equities are moving higher. Treasuries are mostly weaker. Dollar's extending its recent gains. Dollar index is up nearly 40 basis points here this morning. Gold taking a hit as the dollar moves higher. Crude oil down as well. Gold down 1.3%. WTI crude is down 1.2%. Remember, there tends to be an inverse correlation between the dollar and commodities. So we look at the market here. Yesterday, what we had was our first key test of support following the Fed's decision. If we were looking at the SPY, right, we've been highlighting SPY, SPY, 295. The low yesterday was 295.20. You can see here on the at the index level, came very close to hitting the top of this support zone before rallying to close off the worst levels of the day. Support remains 2,900 to 2,950. Resistance now back near 3,000. It looks like we're going to be dancing with the 3,000 level for a little while. The RSI is holding in bullish ranges for now, and so far, so good on the playbook, right? Remember, we've been highlighting that we want to see on pullbacks to this support zone, does the RSI stay in bearish ranges? In bullish ranges, I apologize. So far, so good. RSI holding above 50 on that pullback to 2950 yesterday. We will continue to watch. If the market can consolidate and move higher and the RSI stays in bullish ranges, we can feel confident that the uptrend is resuming. However, if the market starts breaking below and into the support zone, into the 2900 to 2950 support zone, and momentum keeps heading lower, as it did here, we have to start thinking about adjusting our view. But so far, holding bullish ranges, and at the same time, Chaikin money flow does remain bullish. So I realize it's easy to get caught up in the day-to-day gyrations. Obviously, yesterday was a big news day, but let's just take a step back. We've been highlighting the playbook for a couple of weeks now. 2,900 to 2,950 key support. If we break below 2,950 and the momentum starts to flag, we have to start to think about changing our view. Right now, it's playing out exactly as we've been laying out. Test of support, momentum holds bullish, money flow holds bullish. Stay the course as far as I'm concerned, but just be aware of some of the concerns that are out there, and we'll get to two of them a little bit later in the show. So, market in a minute. What am I talking about in my note today to Chaikin Analytics clients? Stocks move lower following the Fed's rate decision, but SPY holds key support at 295. Call it 2950 at the index level. Here's where we start to get into some of the mixed bag. Now, long-term breadth metrics remain bullish, but short-term metrics continue to weaken. On top of that, August and September are traditionally weak months for the market. Futures do point to a higher open today, and we're going to get to most of this later in the show. Let's check in on the power bars. Dow actually strengthened yesterday. Remember, yesterday this was 8 to 8. Today is back to 8 to 7. Even though it was down 1.24% yesterday, 8 bullish or very bullish stocks for 7 bearish or very bearish stocks. The deterioration was in the broader indices. S&P 500 down 1.1% yesterday, 129 bulls, 101 bears. That's deterioration. NASDAQ ratio deteriorated as well. Down 1.36%, an underperformer, 34 bulls to 20 bears. Small caps actually a slight outperformer yesterday, 588 bulls, 278 bears. Bonds uptick, sending yields lower for the most part, which is kind of interesting when the Fed basically signaled that we weren't embarking on a rate cutting cycle. So according to the Chaikin Power Bar, small cap stocks and large cap stocks are bullish. Major indexes are bullish. So again, we're staying the course. The data that we look at, the key data that we're looking at tells us to stay the course. Our stock of the day today, Diodes, comes to us from the semiconductor group, which traded a little heavy yesterday, and some earnings that were out last night were not that great. But let's take a look at Diodes on its merit here. 42.60 closed down 1.48%. Diodes has a very bullish Chaikin power gauge rating due to very attractive financial metrics, very strong earnings performance, very strong price volume activity, and very positive expert activity. And as we dig in and run through the process, very bullish stock, strong trend, strong industry group, type of name we want to consider. And what we have here is what we classify as a little bit of a personality change, right? We've gone from shifting between bullish and neutral, to now we've been bullish since mid-June. And just now, very recently, market and model starting to get into agreement as Diodes begins to outperform the S&P 500. Big spike in money flow as the stock trades up here towards resistance at the $44 level. Notice that has produced an overbought reading for our overbought, oversold indicator. So just with the market digesting the Fed's news, we don't necessarily need to chase overbought stocks that have already had big runs. Why don't we give them some time to consolidate, work off that overbought condition, and then reevaluate? So if Diodes remains bullish or very bullish and continues to outperform with bullish money flow, we want to take a look at it when this overbought, oversold indicator gets down to an oversold reading. Let's throw Diodes, DIOD, on a bullish watch list today, and we will come back and revisit it if and when it makes sense. Turning now to our sector tracker, movement of the major sectors over the last 5 days. Real estate and comms are the only two sectors higher over the past 5 days. Staples, utilities, and healthcare. So definitely a bit of defense towards the top of the list over the past 5 trading days. Fins, energy, and industrials are middle of the road. Materials, discretionary, and tech are at the bottom of the list. And kind of a big sell-off, bit de-risking yesterday. You would expect to see tech and discretionary underperform and a bit of a defensive feel. So hard to say whether trends are really shifting right now. We continue to stay the course, as I've said, but we do want to see tech get back into gear. So if the market holds, we really want to see tech outperform as the largest weight in the index. Industry in focus now is one that we've been warming to. We've been writing about it a little bit in our note to Chaikin clients. We've been highlighting some names within this group as potential bullish ideas. It's healthcare equipment. Over the past 6 months, the group's been a roughly inline performer. However, the power bar ratio, which measures future potential, is strong. 17 bullish or very bullish stocks for 9 bearish or very bearish stocks. It's currently ranked number 12 of 21 subsectors, and it's moved up 1 slot over the past week. So we have a bit of transition here. We're going from inline to beginning to outperform. Power bar ratio bullish. Let's see. This is an environment where you want to really drill down to the stock level and look for the most compelling names. Now, what I will say about these 3 names is that they're all overbought currently. But these are names to consider, to throw on a watch list. Integra, IART, very bullish rating. Zimmer, ZBH, very bullish rating. And West Pharma, WST, also with a very bullish rating. Let's take a look at what we're talking about at the industry level. XHE, the Spider S&P Healthcare Services ETF, bullish rating with a strong trend. You can see here, we've gone from underperforming to inline to underperforming to now inline again, and beginning to outperform. So we do the same analysis. Bullish rating, market and model are in agreement, starting to get there. Closer to overbought than to oversold. Solidly persistent money flow in terms of bullishness. Stock is above the rising long-term trend line, actually triggered a relative strength breakout signal on the move yesterday. So this is an area of the market where we want to go looking for ideas. It's not a raging buy the way software has been for the past few months. Stock selection here becomes important. Stock selection is always important, but when a theme is just beginning to outperform, it makes sense to really hone your stock selection process. So XHE, start to look for ideas within that group. Yesterday's S&P 500 gainers and losers. JW Nordstrom up nearly 8% as the Nordstrom family reports in the news yesterday, reports that they were considering making another bid for the company. Aptiv earnings sent that stock lower by higher by 7.5%. EIX priced a secondary. It was well received. Stock up 6%. MCO up nearly 6% following their earnings, and Amgen up 5.75% on their earnings announcement. Here's where we start to talk about the semis a little bit. They were trading heavy yesterday. AMD, their guidance took 10% out of the stock. Maxim missed 7.7% to the downside. Micron goes down in sympathy, 5.42% to the bad. Molson Coors, TAP, got hit for 5% yesterday following their earnings miss, and Western Digital's earnings announcement sent that stock lower by 4.82%. Sizing up earnings, yesterday's surprises. There's Western Dig. They beat by 5 cents, but the street didn't like what they heard. Altis, ATUS, beats by 5 cents. Twilio, 18-cent miss. General Electric beats by a nickel. And Vertex Pharma, VRTX, beats by 24 cents. Thursdays are the busiest days of the week during earnings season, and today is no different. Before the open today, we're going to hear from Huntington Ingalls and the leading defense space, aerospace and defense. Also hear from Cigna and GM. After the close, Allergan, Hig, and Qorvo. We're going to be watching Qorvo closely, especially in light of some of the earnings prints from the semiconductor names recently. Neutral names of interest before the open. Let's take a look at SPGI, MSCI, Macerich, and ICE. After the close, neutral rent names, Western Union, Fortinet, and MSI. Before the open today, Abiomed reported and is trading lower. Verizon, MPC, and XYL with bearish ratings. After the close, Arista will be a name to watch, ANET. Chaikin suggests caution when holding bearish stocks ahead of earnings. So let's dig into what we're talking about in terms of the breadth picture. Similar chart to what we showed last week, and it's important. Why is it important? Because now we're testing support. Long-term breadth metrics remain constructive. We still have over 70% of the stocks in the S&P 500 trading above their respective 200-day moving averages and testing, but holding the breakout level. So long-term breadth constructive. My issue for the past couple of weeks has been the short-term breadth. Here we have the percentage of stocks above their 50-day moving averages heading lower. And notice that as the market made new highs, long-term breadth confirmed, but short-term breadth did not. And if we looked at the percentage of stocks above their 20-day moving average, you would actually see a bigger deterioration. I touch on this in my note today. So long-term okay, but short-term starting to weaken or continuing to weaken. That's something we want to keep an eye on as the market is testing 29.50, right? If this starts to lead to a break and then momentum rolls over, you start to get confirmation that we could see a bigger break. So far, price is holding. These are yellow flags to be aware of, but I want to point them out to you. So far, market holding above support, so we're going to stay the course. But we want to have a holistic view of what's happening, especially in light of the fact that it's happening in what is traditionally a seasonal headwind, or a time of year that becomes a seasonal headwind for the market. August and September, on average, are negative months for the market. Right? Over the past 20 years, on average, August is down about 10 basis points and September is down about 1%. And interestingly, for September, it is higher only 53% of the time. So seasonality becoming a headwind as short-term breadth weakens with the market testing support. That's kind of the scenario you have right now. Obviously, price is king. We want to continue to focus on stocks in leading industry groups when they become oversold, the very bullish and bullish stocks. But we need to be aware of the market dynamics, kind of giving you the roadmap as we see it. So in the spirit of the market holding above support and identifying strong stocks and strong groups, take a look at Accenture, ACN. Very bullish stock, strong trend, strong industry group, outperforming the market. Oversold with bullish money flow, triggers an oversold buy signal today. Accenture is the type of name you want to consider in this environment, right? We drop down the checklist and we can see that 5 out of the 6 are green. Overbought, oversold is yellow because the indicator is still heading lower within that oversold position. When the indicator starts to head higher in an oversold position, this will turn green as well. But the way that the evidence supports taking a look at a name like Accenture, I'm featuring it in my note today to Chaikin Analytics clients. That's going to wrap it up. There's the address for the email. Sign up, follow this show. I will be back here tomorrow.